Morning, everybody. It's the 26th of January. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman, and after his technical issues yesterday, Steve O'Hare. Morning, gents.
Good
Morning
morning.
all. We need Steve back for another 4 hour.
Yeah,
Yeah.
that would have been nice, wouldn't he? Didn't get to revel in the glory of his
Didn't no
Bitcoin
gloating
trade.
yesterday, so he was allowed to gloat today, I suppose.
I thought it's 5 art, actually.
Oh, don't worry about it. He put me down as a loss, and mine was a small win. So don't.
Oh, here we go.
Yeah, he's fiddling the
Typical
books.
Arsenal. Typical Gooner. When
Yeah.
things are going wrong for them, they're trying to take everyone else down as well.
Yeah, why not?
Yeah. What about poor old Frank?
Yeah, brutal, isn't it?
It is. It's one of those. Them footballing worlds are just horrible, aren't they? I mean,
Yeah.
that's where Arsenal probably did do the right thing, keeping hold of Wenger for so long. Maybe not for as long as he should have done, but 14. Was he 14 years there?
No, he's longer than that. He's over 20 years.
Over 20 years.
Yeah.
Yeah, but I suppose 14 years since they won anything, though, probably. So,
Yeah, that's about right. Yeah, longer than that.
Yeah, so it's a brutal world, but that's you get paid them sort of salaries. It's going to be like a bit like that, isn't it? They want.
Yeah, we spent 220 million in the summer, so
Yeah. I mean,
make it work.
is it enough time? I don't think it is. I think we're in a sort of pandemic as well, lockdown. The supporters aren't there. It's probably not giving him enough time because he's bringing the youth team in, and they're looking fantastic. And start of the season they looked unbelievable. Were they top in December as well at one point?
Yeah, they were going well at one point.
And a few defeats, and you're out.
Yeah.
Sorry, son.
See you later, mate.
Yeah.
Good job we don't have that approach to the talking ball, because you two would have gone ages ago.
Yeah. I suppose, like Frank, we're going to start taking it seriously now.
Yeah, okay.
We're just chipping away. That's all.
Yeah. Okay, so let's get on with it. What news overnight? So mixed news on the pandemic front. One of the big pharma companies, Merck, abandoned their pursuit of a vaccine amid lackluster trials. I guess they probably feel like they've been left behind now as well, with all the other vaccines that are now on the market. European Union plans to require notification about intentions to export vaccines from facilities in the EU to other countries. So there's been a few lags with regards to getting vaccines over to the US and the UK. So, yeah, a bit of mixed news on that front. Fewer cases logged in a number of European countries. Most people saying that the vaccine will protect against the different variety of strains. Obviously, I don't think we'll know that really until a few months down the line. In politics, the Italian Prime Minister is resigning this morning. I don't know if you guys saw that.
He's fiddling the books, isn't he? Because he's just going out to come back in or something.
Yeah, that looks like the plan. Yeah, so he's
nice little Italian swerve.
Trying to avoid a damaging defeat in the Senate by manoeuvre to return as a new head of a new government. So we'll have to keep an eye on what happens on that over the next few days or so. Wasn't much else really. We've got a lot of earnings due out in the States. Some of the big names today: Microsoft, Verizon, Johnson & Johnson. Then tomorrow we have Apple, Facebook and Tesla. Combined, that's over 35% of the S&P 500's market cap this week. So keeping an eye on that as well. There was a very interesting tweet I saw this morning, which I was meant to tag. Let me just see if I can share this screen. That work? Add to stream. Can you see that?
Look at that. That's pretty.
So
love
this
it. I
is
don't know what it means, but I love it.
you do know what it means because you were telling me about this. This is the put-call ratio. So the amount of protection being bought against a drop in the market. So this is the weekly chart at the top of the S&P 500. As you can see, pretty much a parabolic rise there from the lows that we saw in March. And on the flip side of that, below we have the put-call ratio. So while that's heading lower, that's just a continuation of buying more call options or avoiding puts. That's broken to a new low, but looks like very much like a wedge. If that breaks up, then obviously you'd expect that to coincide with the breakdown on the S&P 500 and a fairly swift reversal. As you can see, we're going back to, on this chart, July 2015, and never has there been such an extreme move to the downside. So
I think you'd better explain what a put is and a call, hadn't you?
Yeah, so a call
So
option is
you expect things to go
expecting the
up.
markets to go up. Buying puts is you're expecting the markets to go down. Often people buy puts as a form of insurance or protection against markets going lower. So the fact is that no one's buying puts, or very few people are buying puts. So we've got a massive level of exuberance there. People driving it one way, and obviously when the buyers run out, then you have this huge vacuum that needs to be filled, and that could create a significant amount of volatility. So worthwhile keeping that in mind. We're looking really for a break of this wedge as a bit of a cue to when things could begin to reverse, and it could unravel quite quickly, I think. So we're still at the party, but dancing pretty close to the exit, I think.
I like
Stocks were really.
the
Sorry.
Trump erection section.
Pardon?
Is that, can I read that properly?
Trump erection.
Trump
Where does it say
erection
that?
section.
You're looking
On the
at
left.
Joe's.
Oh yeah, sorry, yeah, you're right. Yeah, no,
Oh.
election correction.
Oh, right, okay. I need my glasses. I'm getting my eyes tested tomorrow. So
Yeah, Trump erection move. You could say that since he got in charge, it was pretty much that, wasn't it?
Yeah. Very successful president.
Biden's a bit old, isn't he? So he's probably going to get a bit of a
flop.
Bit of a flop off.
Okay, let's move on from the innuendo. Let's have a look at some charts. Who's going to go first today?
Stocks went mental yesterday, didn't they?
Yeah, I mean, I just was looking at the
just huge amounts of spikes. Not that I'm talking about stocks. I'll talk about currencies, but
I was looking at the DAX and some of them. They looked like it was looking good for reversals. I mean, I'll just chuck this up now. This is the DAX intraday. So I had a head and shoulders drawn on the chart. Had a decent breakdown yesterday, looking as if it was going to continue lower. Then you just get this kind of move today, and I don't know how anyone day trading these markets at the minute is making any money. It just must be impossible.
But that's just a retest of the neckline break, surely, Joe.
Well, I thought that was down here. Maybe, I don't know.
Yeah, no, I mean, it's sort of like that green bar. I mean, it's a big old green bar, so that's a 4-hour bar that finishes at 10. If that stalls there, that's a great retest of the neckline.
Yeah, maybe. I was looking at this as a retest of the neckline yesterday on the hourly, which looked really nice. It's hit that level there, spot on, and then formed this big old shooting star, complete reversal.
Yeah, nice.
And then bang, just starts tempting you in here first thing this morning, thinking it's making new lows, then whoosh, gone, stopped out. See you later, son.
It's very, very tricky. I think that's the thing. We're sort of all looking for this sort of correction, and
ain't happening.
May not come for a while. Who knows?
What's your take on the chart, Steve? I've just thrown it over to you.
Yeah. Obviously, on the weekly side of things, looking at the FTSE first, it's looking negative. But again, we're negative. Big negative candle of the 11th of Jan that week, and then two pretty indecisive, slightly negative, I would say. Not really any follow through there. And then if you look across to the daily chart, we've sort of like we've come down and just retested support. It's sort of and then bullish hammer maybe. So until we get a proper correction, I think we just got to think it's all dip buying opportunities. I know we're trying to sort of like put a different slant on things out there, make it because the markets aren't very obvious all the time. But yeah, I'm sort of it's tricky, especially on an intraday basis. Let's look at the daily chart on the DAX as well. Again, same sort of thing. We're looking like at the moment it's sort of like almost hammer-like. We get the sell-offs, it's lands at support, and bang, we're back up again. So just sort of think this sort of price action is going to continue. And like you say, we need a market event really for the real sell-off. I don't know what it will be. I don't think it'll just be one of the big stocks missing. Maybe 2 or 3 of the big stocks missing, maybe a bit of a thing, but I don't think that doesn't feel like it's going to happen, because the technology sector is, while we're still in a pandemic and lockdown, is going to sort of benefit from that. Looking at the US again, sell off in the Dow. I think we were a little bit unlucky in the Dow yesterday, looking to buy a dip, but got stopped out on that, and it corrected higher again. Nothing holding the Nasdaq back. Another all-time high yesterday. Boring. And the S&P sitting at its all-time highs. So hanging man there maybe yesterday. Well, I wouldn't. You know, again, I wouldn't look too much for these reversals. Wait until we get a proper reversal and then trade the sort of like the downside, you know, aggressively, because it will be aggressive. Going along again, Australia 200 holding up nicely, the Nikkei holding up nicely, maybe a little bit of triangle formation, but again, it's after an up move, so it should sort of continue. China looking good as well, and that's one thing that sort of like I watching Piers Morgan this morning on Good Morning Britain, and he was sort of saying,
He must have been bored.
Yeah, Captain Hindsight, obviously, or Corporal Hindsight, because someone else, Keir Starmer, was called Captain Hindsight by Boris last week. But Corporal Hindsight, Piers was saying about how we should have done things in the UK, and I agree with him to a certain extent that things haven't been done very well. But then he went on to say that we'll look at what economy is booming, and he said it's China. That's the one that's booming. So should we have followed China? With all their, you know, that they're obviously a police state, they're not showing the results that they had. Should we have forced people to go to work with COVID and let millions die? I think he sort of like had a great argument and then messed it up. Shame on you! Shame on you, Piers. Hashtag Piers. Hashtag Good Morning Britain. Just get it out there. Oh, he's not a wanker.
No, all right.
He's all right. No, you know what? He's very. He's sort of,
I'll let you two get on with it.
He's very sort of, you know, he is like Marmite, I suppose. Some things I really agree with him. Some things I really don't agree with him. Like saying we should have been a bit more like China, and our economy would have been brilliant. So we tried a little bit of both, and we're getting criticised. So.
Yeah.
Get your argument
I
right.
prefer Ricky Gervais's take on things than fucking Piers Morgan.
I prefer Susanna. She's a little bit more sort of. She's still got an opinion and adds that sort of like interrupts Piers as well, which is great. So anyway, that's me done.
I was going to say, do you want to start doing the morning work instead?
Yeah, exactly.
No, fuck that. Gold is boring. Nothing happening there. Nothing happening in silver. Oil is just did some analysis on this and was trapped in a channel. We saw the petro tanker survey out this week, which showed 85% compliance with the oil cuts. So that's lent a little bit of a bid to crude oil, both Brent and WTI. But we're still in this channel. And I think just to correct this bearish momentum, we'll get a little bit sideways, a little bit of sell-off, but really continuing higher. Because again, that's another manipulated market, but let's not go into that right now. Anyway,
okay.
So take over.
Right, cool. Ian, what's going on in the FX world?
Chop chop wibbly chop chop.
Yeah.
We're still in this, aren't we? This is a dollar index 4-hour chart. It's getting a bit bored of it, really. We sort of had this move up from this 50% level yesterday, but we're getting quite a decent reversal. It's all been driven by stocks, isn't it? If stocks are going to go up, then this is going to go down, and if the stocks go down, then this is going to go up. It's as easy as that, really. 50% would dictate, if you're looking at cipher patterns, that the next move down is to here, which is the 88.6% at 89.40. Got a reversal candle on the 1-hour chart. Got a bearish engulfing off that price action this morning, which is not looking very funky, really. But I mean, really, at the moment, we're in no man's land. It's buy a break to the upside or buy a dip to the downside, or just get chopped up in the middle, which is what's happening in indices and most currency pairs. So my favoured trade is to try and get short of majors, sterling dollar, sterling dollar, euro dollar. I get longer dollar Swiss, but the timing is going to be essential. looked at this yesterday, talked about this yesterday. Potential head and shoulders on the 8-hour chart. Measured move to target is down here at 117.59. But again, we had a Gartley pattern. We had a decent push to the downside, but there's nothing to say that this is now not the next correction. In other words, 1, 2, 3, 1, 2, 3, and then up again in 3 to complete a higher correction. And like I said, it's all going to be driven. It's not driven by euro. If we go to this is a euro basket, Joe's euro baskets, and you can see here that this is daily chart. It's just the euro is just moving sideways, so all of these moves are all being driven by the dollar at the moment. So basically what I'm trying to say is, unless we break this neckline here, then there's nothing to say that we don't go down and then form a higher free wave correction. I think looking at these swing highs over there, 122.72, this would be sort of a prime short entry, getting close up towards 78.6% of that move lower. Cable, again, he's desperately trying to get out of this pattern, but it's failing miserably. We had a spike lower, which would have probably triggered some shorts this morning, and it's just taking a bid again. As I said before, I've got nothing in the way of resistance until here, 137.72. So maybe just one last drive higher as that dollar index moves to the downside, and then that offers a decent risk reward there with a target down here at 131.80. Dollar Swiss is a mirror image at the moment. There's not a lot going on in Swiss, the same as there's not a lot going on in euro. So this again is just being driven by the dollar. 50% fib here. Like I said, it could drive all the way down here to 88.6, but I think 88.21 is a favored support level. I'm going to bore everybody for a second here. There's something called a TDST, which I look at DMARC indicators a lot, and a TDST is a support level which is left by a 9 count, and there's a daily support level here. So 88.21, I think, lining up with the 61.8%. And that TDST level sounds like a venereal disease, but it's not.
It does,
is quite prime. Dollar yen, is this a flag formation? Is it a wedge pattern? I don't really know. Can't get a handle on dollar yen. Again, I think you're going to get sideways chopped while indices are messing about. I've got a resistance level here at 104.05. And then I'd favour the downside towards this sort of level, 102.79, with quite a tight stop. Dollar CAD, if we squint really hard, in fact, I'll do it to the shorter time frame, and this is making me wonder whether or not the dollar is going to correct lower as well this morning. 1, 2, 3, 4, up in 5. Commodity currencies have a tendency to overextend the fib levels, so I think we're going to get a correction to the downside. I've got some support here, 126.58, 126.41. If we go to this time frame, we'll have to break back inside of this wedge formation to be able to get down to those levels, and then I'll look at a head and shoulders, so left shoulder, head, and then coming down to those support levels I just talked about to form a right shoulder. So I don't know if this wedge breakout is going to hold. Obviously, first support is located at 127.31. Aussie dollar, again, it's just really sideways movement, isn't it? I think this is a descending triangle formation. The support level, I suppose, is probably there, not there, with spikes through. So support around 76.65. Again, selling into rallies offers sort of favourable risk, because you'd look at sort of a downside target down here somewhere, 70, around about 75 the figure. Euro sterling, maybe a little head and shoulders pattern. Got support a bit lower actually. Our support comes in about 88.55, so maybe just another 3 leg pattern. And that move higher, if and when we get it, I think is only corrective, and I'd look to sell into it. So just be careful if you're going to take longs on that dip. Euro yen, again, looked decent to the downside. That looked like a free wave correction, but I think we're going to actually drive higher and get up towards these sort of confluence areas up here, which is around about 126.80. And it's also will probably line up with a 78.6% pullback of that last decline. So again, really choppy price action when indices are messing around. You might get a wedge formation in there. You could look at the trend line resistance to potentially get short, but I would expect price action to be very mixed still. And like Steve was saying, I think you're really going to need a decent catalyst to push these lower.
Yeah, I agree. I'm not sure what that's going to be, but well, hopefully we'll find out at some point.
Oh, hopefully we won't. If it's a bad market event, I don't really want to see it.
No, that's quite fair.
I'd like to see it coming, but I don't want it to happen.
No, not when I'm caught in the wrong way. Okay, so gun to the head from yesterday. We are on a decent bit of form. So obviously we talked about Steve's humdinger on Bitcoin on Friday. That was 5.4R. Due to your technical issues yesterday, we didn't get a trade from you, Steve, but we did have a Dow short which hit target, 3.41R on that, and Ian was 0.88R to the good at 9 o'clock. Was looking better at one point, but still a win. So nice uptick in the P&L finally after weeks of struggling. The price action's still choppy, so maybe a bit of an indication that things are on the turn as we're starting to get a little bit more follow through on some of our ideas. Anybody got something ready for us today?
I'm going to take the dollar index, but I know it's counter trend. I'm just hoping that this bearish engulfing holds, but I don't really like it. But there you go. I've got nothing else that I do like, to be perfectly honest. So I think it'll offer half decent R for a move down there. Let me just get a stop in there. So getting short at 90.45. We'll stop at 90.62, targeting 80. What is that?
88.
89.87. 3.4R.
Lovely,
counter
Steve.
trend.
No, I'm not ready yet, Joe. You got anything?
Yeah, I'm looking at Bitcoin.
That's what I was looking at, but I'm sort of scratching my head. I might go the opposite way to you, to be honest.
Okay, well, I've got. I'm looking at obviously small time frames here. This is an hourly, so got a bit of a corrective, maybe wedge going on here. Maybe that'll end up being a flag, or maybe it'll end up being a head and shoulders top. I don't know, but this is what I'm looking at. So this goes back to the 8th of January. Looking at a pattern with inside that larger wedge, which may be this correction towards the upper end. Bit of a breakout of a small wedge here over the last hour. So I'm looking for a move higher. So it's currently 31.888. Looking for a move up to 36.670 and a stop loss at 31.009. A lot of numbers in this, isn't there, in Bitcoin?
Yeah.
So about 5R, 5.5R on that one potentially.
Good luck.
Really tight, but we'll see what happens.
I like that.
Steve, what you got?
Yeah,
Is that enough time?
Well, I was going to do the same thing. Let's see if we can. No, there's nothing there. Okay, let me go for gold, which I said was boring, and I feel a bit bad now saying that. And weekly chart last week was a bullish outside week, so that's positive. We're going sideways on the daily side of things. So let's go down to the hourly, see if we see any sort of patterns forming. We've got obviously that spike lower, and we've had price action retest the upward trending support. A little bit closed on it at 7 o'clock to 8 o'clock, 8 o'clock to 9 o'clock. It's bounced higher. So let's go for a little long in gold. We're getting long at 1853.36. We'll keep the stop quite tight. 18. 49.36, and we'll go 3 to 1, looking to target 1865, which is just in front of the 1868 recent swing high. So that's me buying gold with a 3 to 1 risk reward strategy.
Lovely. Okay. Good luck to everybody.
Yeah, good luck.
Let's hope we nail another winner. News-wise today, so we had some data out this morning from the UK. Early jobs data out was a bit better than expected, although employment's still around unemployment's around 5%. Later today, we've got US consumer confidence at 3 p.m. Anything else you got on the docket, Ian?
Only overnight, really.
It's Australia Day today, so it's a holiday.
Yeah, and then so we got CPI inflation figures overnight, consumer price index, which are a big 3 or big red as far as FX Street are concerned. So market moving data overnight, and that's it really.
Okay.
We've got Davos, haven't we?
Oh, is that going on now? Is it?
It's a virtual forum,
virtual
though, isn't it?
one.
Right.
Yeah, virtual. Yeah.
I've been to Davos skiing. It was rather nice.
Yeah, I bet it was. Okay, well, I think that's pretty much it from us today then, guys. Let's wrap it up, and we will be back tomorrow morning.
Cheers.
Indeed.
Have a good one.
Cheers, guys. Bye.
Bye.